Nvidia is scheduled to report third quarter fiscal year 2025 financial results after the markets close on November 20th, 2024. So a lot of investors are curious if they should buy Nvidia stock before the company announces those earnings results, because typically the days following an earnings release can be very volatile. A stock price can jump by 20, 30, 40, 50% following an earnings release. So investors might want to get ahead and buy before. Also, earnings can be volatile on the downside, with the stock price falling by those same numbers I mentioned earlier. So investors are fearful and wondering if they should buy it after the company announces earnings. So it's a big decision point for investors, and understandably, they're curious about the timing of that purchase. So I'll answer that question and I'll address the concerns surrounding the earnings release and Nvidia stock. I'll also preview what investors should expect from Nvidia in the upcoming quarter, the big numbers to pay attention to, the big qualitative factors to pay attention to when the company announces results. So let's take a look. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So the first thing to keep in mind with Nvidia and the third quarter fiscal year 2025, which the company will report on November 20th, is the revenue number, which Nvidia has forecasted at $32.5 billion, with gross profit margins coming in roughly around 75%, which are remarkable gross profit margins for Nvidia, for a tech company the size of Nvidia and the type of products that Nvidia sells. It's best in class with its gross and operating profit margins. Now, if Nvidia indeed reports revenue as they are forecasting for the third quarter, it would be significant growth from the previous year, where they reported $18.1 billion in revenue on gross margins of 74%. So Nvidia is forecasting an almost doubling of revenue and an increase in gross margins by roughly 80 basis points here, up to close to 75%. So if they indeed report those numbers that they are forecasting, it's going to be an excellent year-over-year growth number, as they have been reporting for some time now. They keep reporting these excellent rates of increase, and investors are wondering how much longer can this last? And it looks like it's going to last at least another few quarters, given all of the data points I'm seeing across the market for Nvidia's products. All right, so another thing to look out for Nvidia stock investors in the upcoming earnings release is the forecast for the next quarter. So the number I shared with you about the upcoming quarter and what Nvidia forecasted, they're likely to provide another forecast as well. So the fourth quarter of 2024, Nvidia reported $22 billion in revenue, which was a year-over-year increase of 265%. So in the upcoming earnings, when they forecast the next quarter, the rates of increase will be nowhere near this number. The rates of increase are decreasing. So the company is forecasting revenue of $32.5 billion for the third quarter. For the fourth quarter, what investors should be hoping for or looking for is a revenue forecast number of roughly $36 billion or above. If Nvidia forecasts fourth quarter revenue of $36 billion or above, with gross profit margins around 75% or perhaps higher, I think that would be a good number for Nvidia stock investors. Anything around this number, this $32.5 billion number, if they forecast a similar number for the fourth quarter, that would be a poor outlook. That would, I think, cause the stock price to decline, because that would mean that sequential rates of increase have slowed, which would be surprising because Nvidia's just now ramping up the Blackwell technology, and it's shipping out billions of dollars worth of that technology expected in the fourth quarter. And so incrementally, that's supposed to add on to their revenues here from the third quarter. So investors are looking for incremental sequential growth between the third quarter and fourth quarter of 2025. Now, Another big thing for investors to look out for from Nvidia is what I talked about earlier, the Blackwell technology. How is the manufacturing ramp up going? Is it going as on schedule? Has perhaps the demand been so strong that they were able to increase the output to match with the increase in supply? That would be a surprising comment from management if they were to deliver a comment like that. For instance, if they were to say something like, our orders for the Blackwell technology, we already mentioned were sold out for calendar year 2025, but we were able to go back to our suppliers and create an increase in supply because demand was so strong. We were able to increase supply meaningfully to match our orders for calendar year 2025, and we're still sold out. Even though we increased the supply, we had orders that were already matching with that increase in supply. So we're still going to be sold out, but now we're going to be sold out at a higher level of output. And so that would be a nice positive surprise that will boost the share price higher in that event. Also, I think Nvidia will start talking more about the technology that's following Blackwell. They've already hinted at the Rubin, which is what they're calling it, the technology that's going to follow Blackwell. And investors will want some more details. And if Nvidia provides more details on that, as far as what demand looks like for that technology, what supply looks like, how's manufacturing planning going for that? Is there any early hiccups? Are there any headwinds they're facing? Anything about that's positive, I think will send the share price higher, because that's not priced in yet to Nvidia's share price, because that's a product that's coming out in 2026. We don't have very much insights into that product just yet. So those are the puts and takes here for Nvidia stock investors to look out for from Nvidia. Of course, I think they're going to get asked some questions about geopolitical concerns, the incoming administration in the US, and how they've been increasingly focused on fighting the outsourcing in the United States, bringing back more manufacturing jobs to the United States. And so Nvidia is going to be asked those questions. And what they've been saying, they've been getting asked this question for a couple of years now. And what they keep saying is that they have a backup plan. They have other areas where they can go to if their production in Taiwan becomes at risk. They have a backup plan. And I think investors just want to be reassured of that, get a little more detail on what is the backup plan, what's the downside in that event, and some details around that, just to reassure investors as they've become more concerned about this geopolitical risk, especially as the results of the US election have hinted to more protectionism in the United States. Okay, to answer the question if you should buy Nvidia stock going into earnings, it's trading at a forward price to earnings of 35.82, which if you're measuring just by the forward price to earnings ratio, it's undervalued. If you compare with the expected growth rate over the next 5 years, Nvidia is expected to grow earnings per share by over 50% per year over the next 5 years. If you compare that with the forward PE of just 35, that signals that it's undervalued, very undervalued. So according to this metric, Nvidia is undervalued. I recently did, on November 11th, another discounted cash flow valuation model for Nvidia stock, and my intrinsic value per share using my DCF model came in at $314 per share, which also suggested that Nvidia stock is undervalued. So I've looked at Nvidia stock several different ways, and nearly unanimously, my analysis points to Nvidia stock being undervalued. That can partly explain why all year long I've come to the same conclusion, and I've had Nvidia stock as one of my top 25 stocks to buy and one of my top 10 growth stocks to buy all year long in 2024, and I updated that on November 11th. So today, November 11th, I still think the stock is undervalued, and going into the earnings release, it is a buy. It is a buy, unquestionably. But to buy before or after really depends on the risk tolerance of the investor. If you have a high risk tolerance, then I think the stock is undervalued enough to buy going into the earnings release. However, to minimize risk, you could split your investment purchase in half, buy half before earnings and half after earnings. That way, you evenly split your risk of missing out on a big increase, because you'll have half of your investment before earnings and you'll benefit from that upside. But also you'll minimize your risk of a big drop because you're allocating half of your investment to after earnings, where if there is a big drop, you'll get more shares at the lower price. So that's why I suggest the lower risk strategy is to split half and half. But those that have a very high risk tolerance can go ahead and buy before earnings. Either way, the stock is undervalued, and you can decide how you want to allocate based on your risk tolerance. But in terms of the actual fundamental value of Nvidia stock, I think is undervalued. Hey everyone, if you like watching my videos, then I've added a great complimentary product just for you. I've created a book, I've written a book that's available for sale now that highlights my 6-step investing framework. Even if you don't follow that investing framework, just reading it and knowing how I evaluate stocks will make it a lot more interesting and informative to watch my videos. I've added the link in the description below.